As we check the boards right now, Lucid Group is trading at $11.05 per share, which puts the stock up a massive 13.57% during today's intraday session on Wednesday, January 21, 2026. This double-digit spike is turning heads across the street, especially since the stock has spent the better part of the last few months fighting to keep its head above water. While most investors are conditioned to look at a 13% jump as a simple relief rally or perhaps a bit of short covering, the reality underneath this move suggests something far more calculated. We are seeing a specific confluence of institutional positioning and a massive shift in how the market is pricing the upcoming production cycle for the Gravity SUV. The immediate expectation for Lucid is often centered on its burn rate and its reliance on the Saudi Public Investment Fund, or PIF. People see the high cost of production and assume the company is just a luxury science project, but the reality is that today's volume spike is being driven by a quiet realization that Lucid's efficiency advantage is no longer just a theoretical bragging point in a slide deck. As battery costs across the industry have finally dipped below that psychological $90 per kilowatt-hour mark this year, Lucid's ability to extract more miles out of a smaller, lighter pack is starting to show up as a genuine margin protector. If you can get 5 miles per kilowatt-hour while your competitors are struggling to get 3, your bill of materials looks a lot healthier when you're scaling to tens of thousands of units. This is the wedge that is driving the stock higher today as Smart Capital begins to front-run the Q4 earnings call scheduled for February. When you look at the landscape of online investment right now, the conversation around Lucid often feels like a tug of war between the skeptics who call it a money pit and the believers who see it as the next great American automaker. But if you look at the technical setup on platforms like the Fidelity Trading Platform or the Interactive Brokers Platform, you'll see that institutional ownership has quietly stabilized at around 75%. That doesn't happen by accident. Big funds aren't just sitting on this because they like the cars. They are sitting on it because Lucid has effectively secured its runway through 2026 with its recent capital raises and the ongoing support from the PIF. This provides a safety net that most other EV startups simply do not have. If you're using a tool like Schwab Intelligent Portfolios or managing an individual brokerage account, you've likely seen the volatility that comes with this territory. Lucid stock has been a battleground. For a long time, the narrative was that Lucid could build a great car but couldn't build a great business. We are now entering the phase where the business side is finally trying to catch up to the engineering side. The recent news that Lucid is moving equipment into its Saudi facility for full-scale manufacturing rather than just assembly is a massive step. This isn't just about localized production, it's about a global supply chain strategy that bypasses many of the tariff hurdles that are currently strangling other luxury EV makers. Now, I want to hear from you. Comment below how many shares of Lucid Group you currently hold and what your average cost basis is. Are you a long-term believer or are you just playing the volatility of these intraday swings? Seeing the community's positioning helps all of us understand the sentiment shifts in real time. Looking at the recent stock movement, it is impossible to ignore the momentum. We saw a 13% jump today, but this follows a period where the stock hit 12-month lows just a few sessions ago. This kind of V-shaped recovery on high volume usually indicates that the weak hands have been shaken out, and we are seeing a fresh accumulation phase. Volumes today are significantly higher than the 20-day average, which suggests this isn't just a retail-driven pump. There's real institutional weight behind these bids. The sector momentum is also helping, as the broader luxury EV market is projected to reach nearly $286 billion this year. Investors are looking for the winners that will capture that growth, and Lucid's position at the top of the range and efficiency leaderboard makes it a natural candidate. The macroeconomic pressures haven't disappeared, of course. Interest rates are still a factor for luxury purchases, and the cost of capital remains a concern for any company that isn't yet cash flow positive. However, the expectation that the Fed might finally start easing has given high-growth, capital-intensive stocks like Lucid a second wind. If you're doing your online investing through the Robinhood app or SoFi Invest, you've likely noticed that the risk-on sentiment is starting to return to the EV space. It's no longer just about Tesla stock or Apple stock. Investors are looking for the next leg of growth in the self-investing world. Let's talk about what Lucid actually does for those who are just tuning in. At its core, Lucid is an integrated technology and automotive company that designs, engineers, and builds electric vehicles from the ground up. Their first product, the Lucid Air, set the standard for range and charging speed. But the real story for 2026 is the Lucid Gravity. This is the SUV that is supposed to six-fold the company's total addressable market. The engineering team, led by former Tesla engineers, focused on a space concept design that gives the interior the room of a large SUV with the exterior footprint of a much smaller vehicle. This is achieved by their miniaturized powertrain technology. In the past, the company has struggled with production bottlenecks. In 2024 and 2025, they faced significant challenges in scaling, which led to multiple downward revisions in guidance. This is why the stock took such a beating last year, falling over 60%. But the 2025 year-end numbers showed a 104% increase in production year over year. They produced over 18,000 and delivered nearly 16,000. While they are producing more than they deliver, that gap is narrowing. The reality is that the demand is there. The problem has been the physical act of getting those cars into customers' driveways. As we look toward the future, the outlook is dominated by two major catalysts. First is the full production ramp of the Gravity SUV. This isn't just another luxury car, it's the vehicle that determines if Lucid can move from a niche player to a volume manufacturer. The second catalyst is the mid-sized platform, which is expected to launch late this year or early 2027. This platform will underpin a more affordable model that could finally bring Lucid into competition with the high-volume segments dominated by the Model 3 and Model Y. The risk, as always, is execution. The transition from an assembly-only model in Saudi Arabia to full-scale manufacturing is a complex logistical task. Any delays there could dampen the current enthusiasm. Furthermore, while the PIF has been a reliable partner, the company eventually needs to prove it can stand on its own 2 feet without constant infusions of capital. The market is currently giving them the benefit of the doubt because of the sheer quality of the product, but the clock is ticking on the path to profitability. If you're managing your own portfolio, whether it's through Fidelity Wealth Management or a simple Robinhood investments account, you have to weigh these high-reward opportunities against the very real risks. Lucid is not a stock for the faint of heart. It is a bet on superior technology winning out in the long run. The expectation was that Lucid would slowly fade away into the startup graveyard. The reality we are seeing today is a company that is producing cars at a record pace, expanding its global manufacturing footprint, and finally seeing its stock price reflect some of that underlying progress. To wrap things up, today's 13.57% move to $11.05 is a clear signal that the market is reassessing the fail narrative that has plagued Lucid for the last 18 months. The contrast between the expectation of a slow decline and the reality of a production ramp is what's fueling this rally. We have seen a stabilization in institutional ownership and a clear roadmap for the next 2 years. Whether you're using an intelligent portfolio or active trading platforms like Interactive Brokers, the key is to watch the delivery numbers and the progress in Saudi Arabia. Those will be the true north for this stock as we move through 2026. Lucid has the technology. Now it just needs to prove it can be a world-class manufacturer. Before you go, make sure you've shared your thoughts in the comments. Are you buying this dip, or do you think the 13% jump is just a temporary spike before another leg down? Your perspective helps everyone in the community navigate these volatile markets. We will be watching the close today very closely to see if the stock can hold these gains, as a strong close above $11 would be a major technical victory for the bulls. Until then, keep an eye on the volume and stay disciplined with your risk management.